Good morning, Paul Georgi from Allendale. It's January 15th, Tuesday morning, and getting some volatility in the grain markets this morning. At 5 o'clock when I did the wake-up call, the markets were lower, just on some profit taking, and since that time we've seen a nice rally here. Beans marking new highs, corn making new highs of the move. So got a little bit more buying and follow through buying in these markets. Yesterday the funds were huge buyers of 15,000 contracts of soybeans, estimated around 11,000 contracts of corn, and 6,000 contracts of beans. And it looks like we've got some of that buying continuing here this morning. In news around the world, China soybean prices, they are not quite as strong as what the U.S. has been here in recent days, but stronger. The main focus there, and could be a reason for some of the strength here in the markets, is that the crush margins in China has reported to be improving considerably, and meal users and buyers there have been going hand to mouth. So with the improving crush margins, they're expected to see better demand from U.S. for soybeans here for the February time frame. So that's an optimistic idea here this morning. We did have January contract go off the board, and no deliveries there. March contract at a discount to the January, so another reason for some excitement. Basis and for soybeans at the Gulf have gone down a little bit, which could be because of the opening of the Mississippi River, much better navigation, cheaper barge rates, and starting to see some incentive possibility that we could see some better exports out of the Gulf because of this Mississippi River transportation system getting back to a more normal level. However, the PNW has seen soybean basis there jump sharply, and it appears that China is doing some fill-in buying because of delays out of South America and the cost of getting beans out of the Gulf. They've decided to go to the Pacific Northwest to get their supplies. The corn market, the bullish attitude and numbers there from Friday's USDA report still provide support. However, our Rich Nelson says don't get too excited about those feed and residual numbers. That years where we've had early harvest, this is a very much a tendency that the USDA increases their usage numbers for the first quarter, but then make some considerable adjustments on that second quarter usage. We won't get those numbers till the end of March, however. So that's what the trade is talking about right now. In the livestock, cash cattle are waiting to see some bids develop. The futures slightly lower here this morning. Cutout values were mixed. Choice down 15 cents. And select was up 127 yesterday. Pork cutout was down 48 as well. The main thing in the cattle and takeaway that we seen in the USDA report on Friday was that they expect livestock production, or beef production specifically, to be down about 4.3% next year, much lower than 2012. And most of this reduction to come later in the year rather than earlier, that as many were expecting to see this first and second quarter supplies reduced. They're expecting a 9% reduction in the fourth quarter of 2013. So some changes in attitude there, but certainly a reason to provide support on any weakness in the livestock market. Those are things that are going on here today. The markets, the news is pretty quiet and not eventful as of yet. So stay in touch with Allendale. We'll keep you informed the best we can. Want to remind everybody we've got the Allendale Conference coming up here next week, January 25th, 26th. There's still some seats available. We'd love to have you. You can get all the information right online at www.allendale-inc.com. We wish everybody a very successful trading day, and I will talk to you tomorrow morning. Thank you.